Morning, guys. How we doing? Back at it. We're gonna be breaking down the market. It's Friday. We're coming towards the end of it here, so pretty stoked. It's been an interesting week, up and down. $3 trillion stimulus bill. So, without further ado, let's get down to it. Open up this. Let's get some music. So here's everything that we were looking at yesterday, guys. Still on the chart. ACX is a long hold. DMPI is a hold till the end of the month. mRNA went even on the day. LLY went up. RGRX went up. Tesla was up. Codex declined. IPIX is a long play for me. INO. APDN took off. MGNX is already really high. That's an article worth reading. OGI up 7%. All right, so let's clear the list. What am I saying right now? Am I saying that it's a good time to invest or not? I am saying that right now, if you know what you're doing, if you know what you're looking for in the market, it's a good time to invest. There's a lot of money to be made. If you don't know what's going on in the market, I mean, you should never be in the market if you don't know what's going on, right? It's a great way to just lose it all. You guys can't hear the music. Why is that? Hmm. Weird. Uh, okay. Let's go. Why is this not working? Technical difficulties. Fantastic. Okay, let's go here. Let's try that. See. Properties. Headphones. Weird. Oh well. I guess for now I'm just gonna keep going, guys. Sorry that there is no musics today. Okay, so what are we breaking down here? We are taking a look at plays from yesterday are done. So let's head into the RSS feed and take a look at the trending news. Bloomberg. Sanofi CEO is going to be a big deal. Okay. FDA stuff. Got to read all of that. It's not good news for Abbott. In-home tests are halted. Allergens at risk. Okay, that's that. Let's see what else is out there. Just gonna retry the audio here. See if I can get this to go. Okay, get rid of this. MBRX comes out of their halt today, so I expect to see news on that later today. I want to get rid of this one. Okay, let's go back here. ACRX. Velocity. Molecular. All right, that's a good start. Let's start diving into these articles here, guys. So, 5 ASCO. ASCO is the American Society of Clinical Oncology. It's one of the biggest cancer conferences in the world. It's taking place at the end of the month digitally. But that doesn't change the fact that certain companies are asked to present. So they're saying Allo, Amgen, MGNX, Arvinas, CTMX. Those are none of the ones that I liked out of this, but those are definitely ones to take a look at. So let's go with CTMX, ARVN, MGNX, Amgen. Didn't say there were 5. Oh, Allergen. Okay, so the reason why none of those are ones that I'm looking at is because of the price point. If I'm going to do stocks only with equity, it needs to be in a different price bracket than that. Okay, so this company apparently is a huge deal. They are not publicly traded. They're from China. I probably wouldn't touch them anyway. Biden says voters shouldn't vote for him if they believe the sexual assault allegations. I mean, this will be interesting. Morning, Euro, what's up? This will be very, very interesting because he's come out and told people if you believe this, not if this is proven false. He says, if you believe I did it, don't vote for me. I think there are a lot of people out there that are considering maybe, just maybe. Um, Biden's had a lot of negative press around that. Kind of creeps a lot of people out. Okay, so Taiwan Semiconductor is opening a big thing. This is the tech sector. I just wanted to look at it so I could understand what's going on here. That this is a big deal when you get a $12 billion plant opening up in South Korea. Arizona. This is what happens at 4:30 in the morning. You're reading and yeah. So Arizona is going to get a new massive semiconductor plant. So that's interesting. I wonder if China's just going to filter money into Taiwan and have that come into the U.S. now that there's more and more oversight about Chinese companies. Okay, this is one of those generic reports that doesn't really provide a lot of insight into anything. They are seeing on MFA that there is a bullish opportunity. I know yesterday at the end of the day, MFA went for a little bit of a run. Yeah, so here was MFA yesterday, 135, and it went for a bit of a run. This I think is going to continue to run. It typically has a pattern of doing this. We go for the month, yeah. So it dropped a little bit lower, but this was on the SPY dump the other day. But honestly, it likes to run this 150, 160 line all the way up to the $2 line, the $192 line. So for me, I was in around here at this 150, 160 line. I'm hoping it goes back up to this $192 line. The price movement on that is pretty stable. Now, MFA, the nice thing with MFA is it has a dividend yield. So if you guys were here yesterday, we were talking about drip portfolios, stocks that have a decent drip to them. This had a 10% yield, which is massive, absolutely massive. But it's not so huge because it was a dollar. Typically, this thing was about $7, $8. I had a holding in MFA before COVID struck. So I had it when I was up here. So one of the nice things with a dividend, high yield dividend stock like this is, yes, right now it's $1.63. So you buy up a bunch of it at $1.63, at $1.50, whatever, right? Let's say it goes back up to $7. Your high yield dividend is still going to be 10% of seven, not 10% of two. So you buy a whole bunch of it down here at $152, and then you're able to just take that and run it. You can hold on to this thing and just wait for them to announce, okay, well, now we're back to a regular market that we're expecting, and you piled in and collected thousands of shares on the cheap. It goes back up to that $6, $7 range where it likes to float. It does. It's got good holdings. But when they reintroduce that dividend, man, it's going to be great to be collecting 10% of something that's gone seven times where it is. You know what I mean? So that's what we're looking at with MFA. Okay, let's get down through this biopharma stuff. FDA granted Sanofi's. Okay, so Sanofi's a tale of two cities here. Yes, they're getting approvals, and typically that would be a really good thing for biopharma. The issue is, where's the article? There was one here about Sanofi being in big trouble. No? Okay. So the thing with Sanofi, the thing that they've been doing back and forth is Sanofi has been looking at a potential vaccine and among its other pipeline, but they came out with a statement that the US would see the first dibs on a vaccine that Sanofi put out, and the stock went up. But then France, who has been backing Sanofi throughout the entirety of this event, went, "What the heck do you mean?" The Yeah, I mean, you could definitely do it with larger stocks. For me, I don't see Amazon. Um, I don't see Amazon having the same kind of movement. So when you're doing that drip, right? Let's take a look at Amazon right now. So Amazon's got no dividend yield right now. Historically, I'm not sure that it's got that. I mean, it's up significantly. This is the fall, and we're saying that you're supposed to just skip the gap, right? So 23.88. I mean, ideally with dividends, you want to be able to assume you want to be able to accumulate max. You want to be able to have as big as possible because what you're doing is you're looking for exponential growth. Yeah. And I mean that's just it. So I am a equity bio stock trader only, but even with that, I am not looking at bio stocks to be the drip portfolio, to be the dividend payout. on the basis that I'm just not comfortable with how those stocks move. As you get up into more expensive stocks, for sure, 30, 40, $50 stocks, those have potential as dividend stocks, but that's also true in other sectors. So Total has a great dividend. It's an 8% yield dividend. They're solid energy stock. They've got solar coming up. That would probably be a dividend play that I take when I get to that threshold. But with MFA, if I'm able to take that, so I mean, let's just do the. Okay, let's go open up Google Sheets here. Okay, drip portfolio. Okay, so let's just go by. So they're done by quarters. Got it. Okay, so I guess Q1's gone, right? So we should do Q2, Q3, Q4, Q1. Okay. So the stock that we're trading is MFA. MFA right now is trading at $1.58. Its dividend was a 10% yield, so be times. Um, so there is no dividend being paid out this quarter. I will definitely take a look at KSS. Actually, we can do it for KSS. Let's do it for KSS. Let's do it for KSS right now. I'll pull it up because I mean it's the same math, right? So let's go here. KSS, right? So KSS is 16. Maybe we'll do two. Yeah, let's do two. Okay, so $1.58. No dividend is going to get paid out. So dividend yield. No dividend in this quarter. Amount of shares. Stock price. Shares. Pay it. Okay, so because there's no dividend yield, it doesn't matter how many shares, but for now, I think I have 2,000 shares in this. So payout on this is going to be nil. Okay, so this is MFA right now. Right now, so let's say Q3 we see a recovery, slight recovery. Let's say it doesn't go all the way back up to where it's supposed to, but let's say it goes up to, if we're looking at MFA over 6 months, let's say, give me the halfway. Let's say by the end of Q3, it goes up to $4. Okay. MFA goes back up to $4. Dividend yield is reannounced that yes, they will be paying out a quarterly dividend, which is their 10%, right? You still have your 2,000 shares. So this is equal to this times 0.1. So you per stock, what you'd be seeing is 40 cents out of this, right? You got 2,000 shares. Your payout would be this times this. So you would see an $800 payout. So your initial cost was 2,000. So you put this in and you saw an $800 return. Yeah, 10% yield, 2,000 shares. You'd see an $800 return. Okay, if you had the 2,000 shares. The beauty of this is it rolls in, right? So now it's $4. Let's say, so this divided by this, and see how many shares you can get. You could get 200 shares off of that. So add that to what you had here, right? So now you've got 2,200 shares. Let's say the stock in Q4 goes back up to where it was, right? So let's say it's back up to the $7 range now. This is still the same. This doesn't change. The yield is going to remain. Um, so you just take this and drag it down. Um, you take this, you drag down the payment. Uh, and now what you've got is, right? Um, and what we're going to do here is I'm just going to pull this down. Let's do this out for until Q4. This will be Q4 2021. Okay. So the end of next year is what we're looking at. So stock price is going to stay the same from here. I'm going to assume that we're in that $7 ballpark, which is where MFA just lived, right? This is going to remain the same. The amount of shares that you have are going to change, though. It's going to be, from now on, it's going to be this is equal to this plus this. And so what this does is it's just going to give us a calculation for what we're looking at there. Um, Now this is all the same because this is all the same still. So you just drag this down and you just drag this down and voila. Okay. So what we are looking at is the initial cost on this was 31.60. So that's also the initial value of your holdings in MFA. Okay, so if you bought today 2,000 shares of MFA at $1.58, and this stock goes back up, it's got a 10% yield. There are certain parameters around this, but looking at the stock and how it's performed in the past, its holdings, yada yada yada, this is not unreasonable. And we'll do the same breakdown here on KSS in a second. But what you do with the drip portfolio is you just hold, right? Reinvest what you've got. This isn't if you add any more money, you take any new positions. This is just with your initial investment. So you had a 31.60 value when you got into this. At the end of this Q4 2021, you would have to go one line further. So let's go here. Okay, so you would now have 3,543 shares. Okay. So your initial cost would have been 31.60. Your um, gains after the short period of time would be um, this by this. This should be value. Okay, and your gains is this minus this. Okay, so in just that short time, this is dollars, format, number, currency. So yeah, you would be seeing a $21,000 increase on your initial $3,000 investment, which is kind of no joke, right? This is just you buy those initial stocks, you hold, you let it drip, you let it grow, and yeah, how long did you have to wait? You had to wait till the end of next year. How many of you are seeing a gain like that on a $3,000 investment? Probably not a ton, right? Okay, so that's MFA. Let's take this same layout and pop down here. And so this is MFA. This would be KSS. Right. It's an easy, and this is why I continue to say this, guys. Trading in the market is not sexy. And the people that are looking for this, let's get in, let's get out, let's buy Robinhood, let's why? Why are you doing that? I mean, is there money to be made? Yes, but when you're in that day trader mode, you should be trading with an extremely large amount of capital because that in and out in those micro movements is only of value if you are dealing in massive quantities of stock or money. And most of the traders out there just aren't doing this. This is why I trade stock. This is why I trade equity. But this drip portfolio is a serious beast. Like that's a huge deal. If you had 2,000 shares, and this is not an outlandish projection, right? The scary thing is most people are told to operate on a 5-year plan, right? Um, okay, so that's Q4 2021. Oh, come on. Oh, it's not going to like that, is it? Okay, fine. Q2, Q3, Q4, 22, Q1, Q2, Q3, Q4, 2023, 1, 2, 3, Q4, 4. Okay, let's leave it there. So by 2024, if you just held this, you held your initial holding in MFA, you would be gaining 1,000 shares a quarter. 1,000 shares a quarter. The crazy thing is, your shares, your total shares, would now be. We had to go down one more from here, right? Because it's you would get that paid out. Okay, so this is the number, right? And so what we're looking at is okay. So you had its value is this by this. Look at that. From this investment, your gains are massive. $75,000. $75,000 over 5 years. How many of you make? How many of you, if you could make an extra? If you could make an extra 18 grand a year, from now till 2024, right? If you could make an extra 18 grand a year, would that be life-changing money? Probably. For most, that's not a small number. That I mean, what's minimum wage in the United States right now? 7.25 an hour. Okay, 7.25 an hour. Um, Average income in the U.S. Okay, so we're talking a third of the average income. 30% of your average income just off of this, off of an initial $3,000 investment after 4 years. Okay, so let's do KSS now. So KSS, let's go back here. KSS. So we have to do a couple of different things here. Okay, so we're going to do the same kind of breakdown analysis that we did with MFA, where we're staring at 1669 as the initial price. Let's say that we'll still operate on the 2,000 shares. Okay. Its dividend, is it currently paying out its dividend? It is not currently paying out its dividend. So it's not currently paying it out. So we'll do the same thing that we did with MFA, is assume that this quarter there's no dividend, but next quarter there will be. So your payout is nothing. Your new shares then, as a result, will be nothing. Now, we said, okay, well, we know that there's going to be an economic recovery of some kind. I'm not so strong to believe that KSS is going to go back up all the way in one spurt. So let's say it goes to the 30. I mean, they were up around that 45 line. They're down at 16. Yeah, so let's say that 32.50 line. Okay, so we'll make the stock price 32.50. This has to be changed because it's actually going to be is equal to this is equal to this times. You said it was a 16%. Yeah, that's what I'm doing. Like most companies, there are some companies that are as of right now, because the economy's opening up, saying that they're keeping their dividend. So I'm assuming that by Q3, the end of Q3, we're going to see dividends reestablished on the ones that are saying that there's no dividend. So that's why we have an initial payout of zero on this one, because there won't be any dividends paid out this quarter. Like, it's just not going to happen. Q2, you're not going to see dividends paid out. Q3, you will see a dividend paid out. So there will be no new shares on this. Um, Copy this yield all the way down. Oh yeah, I guess this has to be zero here. But this one here is this times 0.16. Okay. And then after this, let's say Q4, we will have returned to where it was at around that 45 line. And yeah, stocks can move up and down, but I mean, for the sake of just this study, let's see what we've got here. So, stock price goes up to around the $45. You started with your initial investment of 3,300 or 33,000 on a $16 stock, 2,000 shares, $33,000. Over the period here, over up until Q4 2021, you would stand to make 174 grand on this. That's just on rolling over the new shares into this. And this is how this grows. Now, if we want to do the same thing, right, where we go, okay, well, what does this look like by the time that we hit Q4 2021? Or 2024, I should say. Okay, so you're actually looking at 27,000 shares of this. That's 1.2 million. 1.2 million. This is how the drip works, guys. It's a patience game. It's a buy and hold. And I know that seems so counterintuitive to everything that you guys are seeing in Robinhood and online and in Twitch, and but the reality is this is the power of drip stocks. Um, this is the power of having a dividend portfolio. Now, am I someone who's going to be completely in a dividend portfolio? Absolutely not. The answer to that is a qualified no. But should this be something that you consider as a portion of your portfolio? I think absolutely. For me, I like to have 15% of my portfolio in dividends like this. So I know that regardless of the stocks that I'm playing on the monthly or the quarterly, I have a constant drip of income coming in along behind. So that's why I like MFA right now. A lot of people are asking, they say, oh, what's a meme stock? It's an REIT. I'm not sure about it. I don't like it. Okay, well, this is why I like it. By the end of 2021, I stand to make 20,000 on the investment that I'm putting in right now. So for me, that's a number I am okay with. Okay. Um, okay, where were we? Let's get back to this here. Uber, Grubhub. Apparently, the Department of Justice likes them. Apparently, they have a much smaller market share than was originally forecast. Now, the numbers that I was getting were out of New York, right? That's right, money, money. Um, but I guess across the US as a whole, Uber and Grubhub actually have quite a small market share when you combine. And I mean, that's anytime, man. That's super useful for people to understand because a lot of people, the amount of times you get people showing up in a chat and saying, okay, well, what should I buy? What penny stock should I buy? What should I get in on ACB? And it's like, no, absolutely not. Why would you do that when there's so many other opportunities out there right now? The market is just full of them. But you've got this amazing yeah, it's an amazing opportunity right now in the market to get stocks at a fraction of what they're normally worth. Yeah, so apparently Uber and Grubhub will only have 55% market share. So this actually stands a good chance of going through. The only issue that it really poses is for New York City. and I guess LA as well, because Uber is going to have a monopoly in those major urban centers. But other than that, apparently they're good to go. So the biggest brick wall that they're hitting right now is Uber undervalues Grubhub stock, and that may cause the deal to fizzle out. Now, most people out there don't like stock twits. That's fine. The way that I use it in the morning is I'm actually not looking down here where people are chatting it up. What I'm looking at is right here. I want to see the ones that are popping. So, speaking of ACB, there it is. Codex is down. So, what I'm looking for is just something popping like crazy on this, guys. I don't see anything there. I see Nvidia. I see the tech sector up. I see DraftKings up. ACB's up on their earnings. So here's ACB, and everybody's like, wow, up 16%. Yeah, essentially, antitrust is dead. The Department of Justice just isn't going to get in the way. Okay, so guys, ACB. Why don't I recommend you invest in ACB? Here's where it was last May. Here's where it is now. People say, "Oh yeah, the financial crisis." Okay, so pre-financial crisis, it was only worth $25. I don't see it going back up to that value. I don't. I think that I see this as a $10 stock. This is a $10 stock. So are there potential gains? Yes, but the rest of the market is going to go back up to where it was before. I don't see this doing that. I really don't like ACB as a play, guys. I don't. Um, yeah, no, I really don't like it. So yeah, Sanofi's in trouble with France because France has been footing the bill on them. Ohio's getting remdesivir. That's good for Gilead. So let's add Gilead to the list. Good news for Gilead. Abbott's in trouble. So add Abbott to the list. Abbott Laboratories. So Abbott should be a play to the downside, not the upside. False negatives on the Abbott test is really bad news for them. So this is the FDA throwing its muscles out, I guess, saying you can't do that. Allergen's getting bad news. Man, bad day for bio. Allergen, AGN. Okay, so Allergen's got bad news on their breast implants. Peninsula Biotech, Myocardia Inc. MOK. So if you guys aren't familiar, why do you know LIG? What is LIG? What do you mean LIG? Um, what was the ticker on that? MYOK. Okay, guys. So typically the way that bio goes, ooh, funny. Got him. Hilarious. Okay, so typically the way that a pipeline with drugs like this go, holy crap, look at this thing. May was a good month for these guys. It's all good, man. It's 5 in the morning. Uh, so that's nuts. That's a massive gain. Congrats to everybody that was in that. So with Mayock though, the interesting thing with most of these companies is you see people come in, they buy the stock, and then a public offering comes out, and they try to make the gains on this. So the company knows that this is probably not a reasonable price point. Okay, but that public offering that's going to end is going to be a big boost for this company. They're going to have a ton of money to get this thing out. This is a huge deal. This is a huge deal for that company. Um, it will be very interesting to see what it does over the next couple of days. I don't actually like it for a play. I'm going to take it off just because of that growth. I don't think I morning. I don't think that there's any more milk in that. I think that cow is milked. But that's a phenomenal game. That was a phenomenal play. Now it started at $60, so it's kind of hard to get in and make that happen. But um, you know, if you had the capital, great play. Narapta Therapeutics announced FDA has granted fast track designation. Peripheral nerve injuries. Okay, Narapta Therapeutics. Blah blah blah. Okay, so let's see here. Neuroptive Therapeutics. No stock, privately held. Okay, so no bueno. ACRX, blah, 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 blah. It's a nothing article. This popped up for iPix. This is true. Belacin is a 3-in-1 potential treatment for vaccine. Treatment, vaccine, and secondary treatment for COVID, which is why I like it. It is in the final running of candidates. It's just the only one getting no press right now, which is very, very interesting that it's not seeing that. Researchers discover potential targets for COVID-19 therapy. Biochemist, Frankfurt University. When is this dated? This is May 14th. Okay, so this is yesterday. This is still timely and relevant. Germany, how human cells change, blah, blah, blah. February, medical, Frankfurt, COVID. Ooh, ooh, yes. Okay, so why I'm so excited about this, guys, is there is a stock out there called MBRX. Now, MBRX had released press releases indicating their involvement with a study in Germany showing that they had 100% rate of eradication of COVID in vivo and in vitro. So that's not in human trials, but that's outside human trials. That's in petri dishes and in small living creatures. They would take a sample of it, put it into the creature, and test it. 100% success rate. Okay. MBRX. Unfortunately, I can't pull up my holdings right now. I really want to. I'm going to try to reload this here. Okay. It okay, so yeah, that's definitely what we're gonna get to here is um okay, MBRX. MBRX, I've got an average cost. I have to balance that out because that's in Canadian. So I'm sitting an average cost on Verlacidin of $1.29 a share. So when it was halted at 107. Um The thing was, it was halted because there are three parties that are attached to the development of Berlacidin. It's not just Molecular, and there are two other it's not just Molecular and Bio. there are two other companies that are involved in this. Now, the two other companies released press releases that were not just citing the medical results of the study. They were also citing conjecture as to the FDA approval process and what that might look like. So they may potentially stay halted. But MBRX has shown over and over and over again that it in no way was fraudulent in the claims that it made in its press releases. It should be fine coming out of this. The halt ends tonight. So after midnight tonight, the halt ends, which means this will be available to trade first thing in the morning on Monday. Now, this report came out yesterday. What they're getting into here is they've seen that this process works. The university in Frankfurt is super excited about it. The process, not necessarily the company, but among the some stop viral reproduction of the cellular system was this, which interferes directly with the carb metabolism necessary for the viral reproduction. So, virus can't grow and spread inside your body if you've got this. The U.S. company Moleculin possesses a substance called this, a prodrug similar to this. Recently, they announced that they're preparing a clinical trial based on this. This is huge. This is absolutely massive for Moleculin. You have a study here at the top that's saying this thing stops COVID. It stops it. It just stops it dead. It will not spread. It will not grow. It will not go. That is absolutely massive. Now, Bosch Health is another one that you could be looking at. I really prefer this. The number was 100%. 100%. That is nuts. So, of the 8 major players, this one is not currently considered a major player in COVID. But I think with this study backing it and it coming unhalted, I think there's a massive opportunity there. So the two that I'm watching are Berlacidin and Moleculin's WP1122 because Berlacidin is the economic option for the government. It can treat COVID. It can act as a vaccine. So if you already got COVID, vaccine is not going to do you any good. You need a treatment. And that's what Berlacidin does. But it can also be used as a vaccine, and it can also be used to stop secondary infection, which is why I like Berlacidin. With WP1122, for it to be used as a treatment and as a vaccine, it's a double. It doesn't have any antiviral in it, so it's not going to stop secondary infection, but it is going to work to help you completely eradicate it in severe cases. You could just drop in this WP1122 and bam, she's gone. This COVID. That's amazing. That's fantastic news. So I mean, I can't put MBRX on the chart for today because it is halted until the end of the day. But expecting big things. IND application for a new drug with a genus. It's a cancer treatment, so oncology. That's a big deal. I think that is one that we watch. Asian. That's one we watch today for movement. It hasn't moved yet. Typically, we'll see some pre-market action. I mean, that's not huge, but I think we see some pre-market action on that today. Okay, so that's that. I'll leave that drip portfolio there. Waiter. Waiter's really got nothing. FDA approved. Article on coronavirus vaccine. I want to read that. Okay, so let's take a look at those. Chronic subdural hematoma. Not a lot of news around this, so let's see if Bolt has a stock. No. Okay, so that's a nothing. What do we know about the coronavirus vaccine? When will we get it? Let's see. This is from CNET, so I'm not expecting it to actually have over 100 vaccines currently reported, 7 reportedly already in clinical trials. So that's the article that we want. They're citing the New York Times. Vaccine, coronavirus vaccine from Decivir. I would really just love a list. They just don't ever provide a list of what the 7 vaccines that are in the research labs are. I know Berlacidin is one of them. Remdesivir is there. AstraZeneca is there. So Berlacidin, AstraZeneca, J&J, Pfizer, Gilead, Moderna. I'm missing one. FDA approves umbilical system stem cell research. That's a nothing. It's too late to the game. Okay, so guys, this is a big word. If you are interested in trading biostocks at all, this is one that you need to watch. This orphan drug designation, it's a big deal. Um, Orphan drug designation is the golden child. That's what every biopharma wants people to have. You are hoping that your drug gets that approval. The orphan drug is saying that there's either currently nothing in the market that already does what your drug is going to do, or your drug does something better than what is the currently best accepted practice, right? So imagine right now we have chemo, right? We got chemo as a treatment for cancer. But you come out with something that is a pill that you take once a day and that will kill cancer. That would get the orphan drug designation because it is such a superior treatment to surgery. Um, yeah, I think that's a big deal. I don't know that Cellfire is traded though. Cellfire stock? It is not. It is a privately held company. So great news for Cellfire, bad news for us who are looking to trade. Okay, Quora is hardly the place that you want to go for approvals. This is acquired or acquisition. Microsoft is acquiring something. Okay. So cloud, AI, those are both getting huge news, and it looks like Microsoft is going to be a big player in that. Okay, so that's it. No, we still got. Okay, so this is cleared. Moleculin. I don't know why that. I don't know why that flagged MBRX. It says there's a notification about MBRX here, and I just don't see any mention. Okay, so that's a nothing. Yep, yeah, 5G is on the way, and I really, really like T-Mobile as the play into it. All of the all of the telecom that own the bandwidth. So T-Mobile, Verizon are big players in that. If you're looking at it from the tech side, yeah, the tech side is going to have to be there for sure. Microsoft is going to be a part of that. You can see AWS, so Amazon's going to get a piece of that. Google's going to get a piece of that. As far as the hardware of phones, as opposed to networks and infrastructures. Yeah, you better believe Apple's going to do well on that. Google's going to do well on that. Huawei's going to do well on that. Okay, so this is important. Anytime you see a bio stock that's been invited to present, you want to take a look at that announcement. Right? Okay, Ascentage Pharma is to present ACR. Ascentage Pharma is not traded. BioInvent. Nope. Transgene. TNG.PA. You can trade it on the OTC. So I'll still take a look at it. We can trade it on the OTC. So I'm not a huge fan of that, but depending on the news, a biotech focused on development of novel first-in-class immune modulating and various cancer immunotherapy, oncolytic virus against solid tumors. Okay, so I don't suspect we see that moving very much. Um, At its high, it was worth $4. I'm gonna take that off the list. New COVID vaccine, not in the US. It is a European company. Okay, so nothing on that. Britain and the EU are going to war. Not actual war, financial, economic fighting. No chances of a deal by the end of the year. Britain doesn't have to, and the EU can't make them. The UK is not willing to bend at all, in absolutely any way. Yeah, I mean, the EU just wants to have the same deal, but UK can claim that they're not part of the EU. And it's okay. We've cleared press releases. This is just going to be Bloomberg. Ooh. Anytime a central bank has something like that, that has large implications. This is going to try to lock me out of this. Hold on. Lebanon's financial prosecutor ordered the detention of the director at the Lebanese central bank. So essentially, it's a back and forth between the central bank and the government in Lebanon, where Lebanon's saying the governor of the bank, who's been the governor for 27 years, has been fraudulent. He's been divesting funds. It's his fault things are gone. And he's saying, no, no, no. Our foreign currency reserves, essentially the amount of the U.S. dollar is what they're fighting about. The amount of U.S. dollar that Lebanon currently has in its reserves is gone, and the bank is saying that's your fault. As a government, you've been in a deficit over and over and over and over again. You've been using the U.S. dollar to pay off those deficits. That's why the reserves are low. It has nothing to do with me. Defaulted on its international debt. Goods have skyrocketed. Yeah, they're asking for $10 billion without changing a darn thing. I think that that's probably a bad idea. I'm just going to go out on a limb and say that. All right, let's head over to social media now. We've cleared the press releases. See what's happening out here. So the experts in I mean, for me, I have to be aware of them, right? So let's play that out, right? So Lebanon as an economy fails, okay? But when they fail and they default like that, it's not just them that's defaulting, it's all the other countries that own that debt that are expecting payments as part of their budget, right? So when you look at that, you're going, okay, well, who is it that owns Lebanese debt? Well, you know that's going to be China. China's going to have a piece of that. I imagine the EU is going to have a piece of that. It's too close for the EU not to be involved. And Saudi Arabia for sure is going to have a piece of that. Now, EU right now is not fiscally strong. Of those three, China's the only one that's fiscally strong, and that doesn't seem to matter much. So let's take China out of the picture because Lebanon defaulting is not going to hurt China. But the EU right now, that is hard up for cash, they have suffering states of their own, are dependent upon those payments on the loans and debt that you have as part of their budget line. So when you take that out and the default is there, that causes a lot of pain and strife there. Saudi Arabia, who's already down massively to the Aramco foil up, is going to be down. Now, if Saudi Arabia falls, the Middle East as a whole starts to go under. And this is that domino effect, right? Like where you got a little guy like Lebanon who goes over, but these other guys that are kind of floating around there, we're not quite sure what they're doing. Syria, Afghanistan, Iran, Iraq, the UAE. As that little domino falls, if it falls hard enough, it starts to knock the rest down with them. And that kind of a steamroll effect is the one that I'm watching out for. Especially when it's a central bank that's failing, right? That means that's the government bank. That's the currency of the entire country. So yeah, I mean it's never good to see that. It's definitely something that I would like to have. I want to have my eyes on. I want to be aware of. This is ridiculous. That we would be talking green energy right now is just COVID-19 bond fund managers are piling into. I see people piling into this thing, but I just don't see the value in it. I don't. I don't like bonds in the first place, but uh, yeah, a bond that's directly tied to COVID, no, thank you. HEROES Act gets voted on today, guys, so that'll be a positive sentiment for the market. The Fed's buying. So the stimulus bill will pass through the House, no problem. It's a Democrat bill, but the sticking point is it will not pass through the Senate. Not only is the majority of the bill not priced out properly, there are things in there that I know the Republicans are going to have a problem with, especially the $25 billion payout going to USPS and the electoral changes and immigration policy changes that they added to the end of this bill. There's no way that this just goes through as is. They are saying the Fed is buying a massive amount of bonds today, though. Fed buys ETFs. Let's see what news comes up on that. Fed bought 305 million of exchange trade funds in the first 2 days of its historic intervention to the U.S. corporate debt markets, according to the data. The figures revealed in central bank 6.9. So there's 7 trillion in assets that the Fed is holding right now. Okay, so the Fed is not disclosing which assets it bought. Let me just tell you that I would wager the Fed bought some MFA yesterday. Well, we did know it was coming, which is why I got in on this, but I would wager that the Fed has purchased some MFA. I would definitely say that this volume, like what kind of volume, like that, that number's off the charts. I can't even see it. It's nutty, just nutty. Um, and I think that we continue to see that rise today. So let's go here. If you guys don't know about this tool, Fed Dashboard, a lot of people just talk about the repos. Oh well, the repos, the repos, the repos. Okay, that's great, but there's more than that when it comes to the Fed spending. So here you have your repos. That's the most recent ones: 7 billion mortgage-backed securities. So 9 billion yesterday in repos. Reverse repos, 130 million, not a ton. Um, So domestic holdings. This is what the Federal Reserve currently holds. So Treasury bills, Treasury notes. These are typical things. These are not a big deal. Okay. This is a big deal. Mortgage-backed securities. Okay, mortgages. With the amount of forbearance that we're seeing people defaulting on their mortgages, that the Fed is currently holding over $1 trillion. That's right. Uh, this number is in the thousands, right? So add three zeros. So this is $1 trillion, not $1 billion. It's $1 trillion of mortgage-backed securities that the Federal Reserve is holding. That's frightening, absolutely frightening. Um, Debt security. So this is bad loans. That's not trillion, that's billion. But even at that, $2 billion of bad debt they own. Commercial mortgage-backed securities. So this is just a, we're talking your home, we're talking your business, and that's 8 billion in there. Uh, that this is nuts, guys. This is absolutely nuts. This level of spending is insane. This is state-owned everything. They own the commercial properties, they own the residential properties, they own your debts. And people may be saying, okay, well, that's a good thing that they're paying off the debts. Well, no, they're not paying off the debts, they're buying your debts. They own your debt, which means the government owns your debt. They are your biggest creditor. They are the ones that decide what you pay when you pay it. And essentially, if you default, they are the ones that get to claim assets. Um, it's an economic way of saying that they own you. They're buying up your debts, your student loans, your car loans, your credit card loans. If they're buying up your loans, and if they're buying up your house where you live, and they're buying up the business where you live, essentially the government owns you for all intents and purposes. And you can, yes, you still have your rights and freedoms and yada yada yada. But financially, anyway, that's an alarming number, guys. That this is not a good thing. I know everybody likes to joke that Papa Powell's going to print, but I mean that's a big deal. That's a big deal. Let's take a look at the recent repos. So 9 billion yesterday at 8:30. We will probably see another one today at 8:30. Let's crack open FX REIT and take a look at the economic calendar. So we had jobless numbers yesterday. Today we are getting retail sales, so this will be a big one. Retail sales are important because it indicates whether or not people are actually seeing the economy open back up. It's great that the headlines are saying, "Oh yeah, look at us, look at what we're doing," but if the retail sales are not indicating that, if they do not say that yes, absolutely, we are seeing a growth, then we've got a bit of a problem. Um, that this is going to be for April, so this will be month over month, the month of April versus the month of March, but we should still see an increase there. Um, so the consensus is down 12% on retail sales month over month. Hmm. I think we beat that. I mean, we weren't open, but talks of reopening were happening already in towards late April. Georgia was open. Like some of the states did start to open in April. So I'm intrigued, actually. I think that that consensus, given that the previous was 8.7, I think that that consensus came in to be manipulative. I don't think we see a 12% decline in sales into April. I think market sentiment was improving. Instead of just what I think and what I feel, let's take a look at the SPY. Okay, SPY over the past 6 months. So March, this is the month of March, from this line to this line here, this segment. So we see a great decline, and then in April we see an increase. I think we see this number come into the positive today. I think that this is going to be a big deal. Um, I don't think that we see this. I don't even think that we see this. I think we might see a very small decline, even a possible. Well, I think a gain may be too much, but maybe 6%. I think that we're going to see a really good number here. Just looking at the growth, just looking at the confidence, right? Like April, that's a big gain over the month of April. From we started April at 245 on the SPY, and we finished. I mean, at its peak, it was 293. We finished around 280. That's massive growth. I think that that is a huge deal. I think that's a very huge deal. So that'll be a big number to watch. That's 7:30 a.m. So that's in an hour and a half. We get that news. Anything else today that is super important? Important oil rig count. That's going to be important. We're hoping to see that we don't have a further decline in that. Um, yeah, I think today is going to be a good day, guys. The Fed is making its announcements about it buying $305 million of ETFs. That was being seen at the end of the day yesterday in the market. Um, I think that will have rolling implications into today. Um, I'm going to add MFA to this chart today. Pre-market, it's even. I mean, I would love to see this run. I would love to see this run. So, five real estate stocks moving in Thursday's pre-market session. It's not Thursday today, is it? It's Friday. Yeah, okay. So this is yesterday. So Store was moving, Invesco was moving, CBL was moving, EPR was moving. Oh, MFA was moving. So MFA was moving to positive. So MFA, CBL, Invesco, Store. Here are ETFs that you are seeing money pump into. Store is $17. Invesco 260. Back a year, what was this worth? $12. That might be a good play, actually. That might be a good play as well. IVR. Again, guys, you have to do your own due diligence. Everything that's on here is just my opinion. My opinion is not worth anything. I'm not a financial advisor. I'm not qualified to be telling you guys what you should or should not be doing with your money. I'm just doing the research for myself out loud. These are my opinions. Feel free to look into the companies that you want to look into. When I say I'm taking a look into something, it is never confirmation I am taking a position in anything. I would never tell you guys that I am taking a position in anything before I take a position in it. I would never advocate that you guys take a position in something just because I have a position in something. That will never happen. I trade my own portfolio, and yes, I will. I'm open. I'm willing to show you guys what I have in my portfolio. I don't care about that. But I would never advocate that you mirror or shadow trade in any way. Do your own due diligence, pick your own stocks, do your own work. We've got another hour here before I'm going to sign off. So I am going to go refill my water and I will be back. What we are going to do right now is I'm going to go to here, video. Let's go. I am going to run a 60-second ad break, guys, and I will be right back. All right, let's get back to it here. So the nice thing about getting this done and being where we are at 6 o'clock is we actually have a market that is waking up. People are starting to take a look at what the stock market is doing. We're getting additional press releases. So for those of you that were here earlier, you'll note that we clear this out in its entirety. We're going to start to see more and more press releases pop up now. Um, Good China data is lifting oil. So let's go take a look at Koifin right now and see what the markets are doing as a whole. For those of you that don't know this tool, the tool is called Koifin. I am not sponsored by them in any way. I don't need to be. I love this tool. I love what it is, what it does. It provides fantastic snapshots. It can also be a good deep dive. TradingView is just one that's easy for me to keep the list, so that's why I use TradingView. I do trade on the TD dashboard. So throughout the day, when I'm trading, this is what I'm looking at. When I'm building out these charts in the morning to help you guys understand, examine charts, and build out the list that I'm going to watch for the day. I use TradingView just because it's pretty quick and easy to look at. But as far as a snapshot of what the markets as a whole are doing, this is the tool that I love. Right away, you got the equity market. So Dow Jones, S&P, NASDAQ 100, and the Russell. The Russell I don't care about. Dow Jones, S&P are the two big ones that I'm really watching. Man. Okay, so both are up pre-market, so that's fantastic. Sectors that are leading financials. Okay, so this is a big one. This is banks. This is oh man. Okay, so that's a good thing. When you see financials leading into the day, expect that we are going to have a green day, boys. That's just going to be a thing, ladies and gentlemen. It should be a green day today, especially when we've got green across the board here. What's interesting is consumer staples, right? XLP, very, very interesting. So these are sector ETFs, XLF, XLY, XLK. These are individual tickers that you could search up. You could buy them, you could trade them, you could be involved in them. They are ETFs, but they give us a snapshot as to what the sector as a whole is doing. So the financial sector would be your banking, your creditors. Consumer discretionary, I'm not sure actually what's in this portfolio. Not sure what's in consumer discretionary. Tech, of course, your tech stocks, Microsoft, Google, that kind of stuff. Materials, you're looking at anybody that's developing plastics, clothing, fabrics, anything of that nature. I think that they probably have gold in there too. Energy includes your solar, your nuclear, your wind power, your oil, your gas. All of that is in there, guys. There's a little bit of everything in that one, but this helps us to understand what the energy market's doing, and that's good. That's positive. When you see XLE is green, you can also head down here to commodities, and you should see crude and Brent green as well, and we do, and they're correlated. They're moving up. This is great to see the prices coming more in line. They were separating, and now Brent and crude are together, which is fantastic. 9%, 7%. This is looking good. This is looking like a really good day in the market. At least right now at 6 a.m. Who knows? We may get some bad news, but right now I'm pretty stoked. This is looking like it's going to be a very, very nice day. Healthcare, so that's biopharm. This is my industry. Now again, guys, so when you see energy as a sector up or tech as a sector up, that's okay. That's a good thing. Typically, the sector as a whole benefits. With biopharma, it's not the case. It's not like, okay, well, when you see tech doing well, so when you see Shopify do well, you also see some other stocks like Wix go up. You would see Apple go up, you see Apple go up, you see Microsoft go up, you see Google go up. You see generally in that industry when like stocks, similar stocks go up, they all go up together. In healthcare, that's just not the case. If Pfizer goes up, Merck doesn't care. If BMY goes up, Sanofi doesn't care. It's just they're not integrated. The industry as a whole doesn't lift. They each lift on their independent news. So XLV is a very interesting ticker. I, for one, don't like trading this sector as a whole. I always think it's better. Well, I mean, I don't like ETFs as a whole, but I think it's better for you to be dialing in, understanding what's performing in that ETF, and then playing those individual stocks instead of you buying the ETF and you're getting a piece of the pie on the ones that are winning, but you're also getting a large chunk on the majority that are losing. So typically when you look at the ETF, right, an ETF is saying, well, I'll take a little, it's the buffet of stocks, right? Well, I can't really decide what I want, so I'm going to take a little bit of everything. I want, I want some pizza, but I want some hamburger, and I want some sushi, and I want some Mexican food, and you kind of got a plate that's a little bit of everything. And the reality is like, well, that hamburger is delicious. The rest of the stuff is rotten food that's making me sick. So what I like to do is if there's an ETF that's seeing a pretty decent success, it's important to go in and actually break down, well, what is it in the financial sector that is making it spike right now? And so what you can do is you can go into most trading platforms have something like this, but um, head into your heat map, pull it up. You will be able to see a breakdown here. If something is in that gray area, it's neither here nor there, right? Yeah, I mean, if you like variety, great. QQQ is the tech sector. So tech sector is one of the ones that if there was a single industry that I would be considering taking an ETF in, it would be the tech sector, because the tech rises and falls together. It's very integrated that way. That's not necessarily the case as you look across the rest of these. So here's the tech sector, guys. The size of the square is proportionate to the value that it holds as a stock. Okay, so what we're looking at here, tech sector, you're going to see the familiar names: Microsoft, Apple, Google, Facebook, Verizon, Visa, MasterCard, Intel, NVIDIA, Netflix, Costco, Cisco, Adobe, Accenture, IBM. So you can see here, guys, anything that's bright green like this is doing quite well. Anything that's in the red is doing poorly. Anything that's dark red is in serious trouble. So ADP, Adobe is down 1% pre-market. Text Instrument up 1.2. ADI is up 1.6. Cognizant is up 2.5. XLNX is up 3. So that's that, guys. So what we were looking at was financials. So let's head over to financials. Here's Berkshire. They're the big boy in the club. That makes sense. JP Morgan, Bank of America, Amber Tower, Wells Fargo, Citigroup, BlackRock. They're the guys investing in the ETFs. So CME is up 1.5. Northern Trust. These are local banks. That's interesting. Smaller banks are seeing the boom here. Zion Banking Corporation, 4.64%. Very, very, very interesting. I wonder if I can pull up size by volume. Okay, so what I changed here, guys, was the volume of trading, because I want to see what is currently being traded pre-market. Okay, so before, market cap on the S&P 500, color by percent change, group by sector. I can just remove the grouping and have everything here as a whole. So there's the entire stock market in tiny little squares. That's market cap, so by how big their company is, all the way down to the itty bitty little guy down here in the bottom corner. I can change that instead to volume, and it will show me the people that are trading right now, either to the up or down side across the entire market. It's up to you, really, whether if you're just somebody that kind of wants to trade everything, then fine, go ahead, go nuts. You can do this, just take away the sectors. I'm a big fan of having all the sectors up. I like to know which sectors are performing where, which ones are seeing the biggest gain. So Discovery right now is up 7.4% pre-market. Fox, it looks like a lot of these programming providers, Comcast, Discovery, Fox, Discovery again, Dish, Costco is down. Dollar Tree's up a little bit, but yeah, Expedia's travel. So what I'm looking at right here is anything that's tied to TV and broadcasting seems to be doing quite well. early today in consumer goods. Travel looks to have a little bit of hope here. What we're seeing on the downside is consumer staples like Costco. So that's what we're seeing pre-market. That can change really, really quickly once we open up. But for now, that's what you've got. In tech, the big gainers right now are Norton, so security. You've got Cognizant, you've got Texas Instruments, EA slight gain, Adobe slight loss. Just trying to see here, size by volume. Um, Nobody's just popping off here though. Financial. So Huntington, Fifth, People United, Zion, T Rowe, Cincinnati Financial. So this is small localized banking that's having a positive gain. Like you're not seeing the big players here. You're not seeing Bank of America. You're not seeing Citigroup here. So that's definitely worth noting. Healthcare, what we're seeing are big losses at the gate. Nobody is spiking like crazy. We're not seeing one of those massive gains. Energy sector, there's not really much movement happening. Industrials, not really much movement happening. If there is, it's to the negative, with the exception of Cintas. Non-cyclical consumer goods. So Pepsi up a little bit, paychecks up a little bit. So this is just a quick snapshot. It gives you a better understanding of what the market is doing pre-market, by volume and by movement. So that's there. So yeah, so we did that. Here are the markets right now. We're still up. Refresh this. Okay, markets are up. Here we go. Head into this. U.S. Treasuries, municipals, tips. So that's what we were looking at earlier with the Fed, the different Fed vehicles. Here are your corporate grade ETFs, high yield savings account, high grade. I do not play in these. I don't like them. I don't put money towards them. I don't consider them. As far as global yields, so the 1 year, 5 year, 10 year, 30 year, the US is looking good across the board. Germany is hurting. That's not a surprise with them fighting with the UK. What is surprising is the UK is positive. People have a positive sentiment towards the UK right now. Even though they are in battle with the EU, people are seeing the strength in the UK versus the weakness in the EU. Germany cannot keep the EU afloat. It cannot. And what's interesting is the people reaping the benefits of the EU right now are not the ones that are putting the money in. So you see Germany hurting across the board. But look at Italy. People are just expecting that Italy and Spain are going to get paid out. And that's a result of Germany. So these guys are getting paid out on Germany paying them out. And that's a big deal. China is looking better than the US yields. That's nuts. This is a big deal, guys. China, US. 30-year China yield, 3.5%. US, 1.35. It's a big difference. That's double, double. In the 10-year, it's almost quadruple. 0.6 to 2.8, almost 2.8, 2.7. Crazy. It is 8 times. 8 times on the 5 year. 0.3, 1.97, almost 2. This is a big deal, guys. There's a lot of strength in China. People are confident in China, and they're looking to China to recover the global industry, and that's where that support's coming from. So China is going to support the global industry. The U.S. is going to support the global economy. The U.K. is supposed to be this bastion of hope in Europe. That's what this is just saying in this snapshot. These currencies are always against the US dollar, so the value of the euro against the US dollar has gained. The British pound has lost money. The yen has lost. Bitcoin has lost. Now, Bitcoin had one heck of a bounce back earlier this week. Bitcoin dropped down to, oh, this is not, I mean, look at where it was in March. Bitcoin at 4,800. You would have doubled on your Bitcoin. Oh, man. Crazy. But I mean, to that note, people thought Bitcoin was insulated from market movement, and this shows us right now that it is not insulated in any way, shape, or form. It just is. Uh, that argument can no longer be made. As far as markets as a whole, frontier, emerging, developed. If you're looking at frontier countries, these are your markets that you typically would not want to put any money in whatsoever. So a lot of Africa. most of Africa. Um, also, I think Saudi Arabia would fall in there. Markets that are typically very risky would be in this, and they are up. Emerging markets, so we're looking at countries that are not necessarily the cream of the crop, but they are also quite strong financially. So China, Russia, South Korea's in there, Brazil's in there, India's in there. So these are emerging markets that they're looking kind of spicy. They are all up. China's down a little bit, but Brazil, Russia, these are ones that need to gain some territory back. RSX is seeing some good growth, so that's good. Um, Developed markets, Australia is good. France is down. Germany is down. UK is down. Japan is down. So the EU is not feeling good. Australia is feeling okay today. Japan's not feeling good. Um, and that's where we're at. So the other thing that I love about this one is you can head over to top news, and it's going to break down the stories that are getting the most attention here. So World Trade Organ. What do you think about gold with all this printing? Okay, so gold is one of those interesting ones where if I have to pull up, um, hold on, I can just do it in here. Gold, and let's add silver. What is silver's out of security? Silver, and let's add in copper. Let's change this to gold. Okay, gold, silver, copper. Here it is, guys. Here it is over the last 3 years. So let's narrow that down to 6 months. You got gold up here. You've got uh, silver. You've got copper. Okay. Um, so right now you've got gold that's just rocking this, and I mean, I guess you want GLD as the SPDR. Okay, so there's gold. So here's gold as a currency. This is the gold future. This is where we see it. It is pretty much stable across the board. We're not seeing massive gains. Um, it's just not. It's not a behemoth here. Okay. Um, I've got the SMAs at the 50 and the 200. So you can see the 200-day moving average. You can see the 50-day moving average. They're all pretty linear here. Now you are seeing some movement on silver here. You're seeing gold had a much more significant drop, whereas maybe if I get let's get rid of this again. Let's get rid of this. Okay, so you see gold had a little bit of a drop here, but it's not nearly as significant as silver. Silver took a bigger hit, and then you've got copper here. For me, what I find really interesting is people are expecting a boom in the copper industry right now. So gold is extremely expensive. If you're going to get into gold, we're talking $1,600 an ounce right now, headed towards $1,700 an ounce. It's extremely expensive investment now. GLD, you're able to play gold at a much more reasonable cost. You don't actually own the commodity; you own um, shares that reflect it. So $163 though, you can actually buy the commodity at cheaper than that. So $16 an ounce of silver, 230 for copper. What I like about copper is this, guys. Most of the masks that are coming out are looking to implement ionized copper in one form or another. And so copper is actually going to gain in value significantly as these, not just this epidemic continues to play out, but future epidemics as well. What they found is ionized copper inside the masks is an extremely useful way to take a really shitty mask and turn it into something that's really powerful. So for me, copper is actually a really nice play into the future. I wonder. Let's go to all here and track the value of gold. Okay, so okay, so here is 1976. Gold is down at $113 an ounce. We are now paying $1,700 an ounce. Silver at one point was the same value as gold. No, not the same value, but they had similar peaks. What you're seeing now is that there's a bit of a disconnect. They move differently. They're just not mirror patterns. There's significant growth. There's decent growth, but these peaks are sharper on silver. Which for a trader who's looking to get in and out, that means that silver is actually going to move up or down faster for you, which could be appealing. So there is that. For copper, copper wasn't on the market back then. It is as of 1988, down at $1 up to 257. So as far as a long hold, guys, over a period of time, none of these have lost value. They've all gone up in value. If you had bought in at the start of this map, it was $4. It's now 16. You would have quadrupled your money if you just put it in silver and held forever. This is 2011. This is just a massive peak that it hit, $40. But essentially, if you had bought this at 4, it would be worth quadruple what you put into it. Same thing with copper, doubled. I just think there's huge opportunity here, guys, in copper. I like it a lot better than gold, I think. But yeah, so there's that, guys. What I want to look at right now is let's go to. So MFA is an REIT. I want to see TWO. I want to see. Far worse returns than any ETF. I don't like the old concept of the gold standard. Gold is a place to park your money. If you don't trust the US dollar, you put it in gold. And it's not to see portfolio growth. It's just to see that you're not losing wealth. That's all that's there for. And bonds are much the same. Bonds, I have the same opinion. It's a parking vehicle. That's where you park your cash. I think crypto is actually becoming another parking vehicle where you're not really looking to make gains. You're looking to park your currency there, just because you don't trust the dollar for whatever reason. Okay, so I want to look at some other big REITs. Big REITs. 10 largest REITs. So let's pick a couple of these. Okay, I do want a retail one, so SPG will be one that I take. And let's take AMT as well. So AMT and SPG. So AMT. And the reason why we're looking at REITs right now is this is where I think you're going to see a lot of money pop up over the next little bit. Let's narrow this to a month. Okay, so AMT. $231. Okay. So let's pull AMT off. SPG. 200-day moving average is way up at 120. So SPG has some room to run. TWO and MFA. 241 is the 50-day average on MFA. Holy cow, 550 would be the 200-day SMA. So I think M&A here has a lot of room to go. TWO is sitting at $4 right now and has an SMA of 11, so it could still double. But yeah, I mean, more and more I like MFA. More and more and more and more. I just think there's so much potential. Okay, so we've got 60 new press releases in the time that we did that. So let's get back to this. That's gone. This is, what do we got going on here? Ontario's reopening. That's important for me because that's where I live. First steps of reopening are going to be coming into place. Okay. So let's take a look at what press releases we have popping up. FDA approved or approvals got a couple. Okay, that's a nothing. Acquired or acquisition. So if you are new to the stream, essentially what we're doing here is we're doing due diligence. We're taking a look at the stock market before it opens to understand what's moving, why it's moving, what are things that we should look at. If you guys have questions about finance, no problem. Ask away. If you don't understand what you're seeing, if you want clarification as to what's happening on screen, just ask. I will do my best to break it down for you. If you have stocks you want me to take a look at and give you my insight and research onto, I'm happy to do that. I will never make a recommendation of a stock that you should or should not buy. I will never make anything that you hear from me on here is opinion, but I am more than happy to take a look at stocks that you are interested in and give you my opinion on what they look like to me, how they look, what I think that they could do. So if you have things that you want me to take a look at, feel free to shut them out. I'm happy to do that. We're at that point anyway. I've been at this for 2 hours now, so kind of burned through about everything that I need to look at. I've got a list that I'm taking a look at today already compiled. Really, what I'm looking at right now is just the press releases as they start to flow in after 6 o'clock, and seeing if anything really catches my eye that wasn't around earlier. As of right now, I'm not seeing anything that's just jumping out at me. Let's go here. We do still have some earning results coming in. Quarterly profit. Yeah, I mean, this is the story. This is the story. This is a big one. So the U.S. House aims to pass bill rejected by Republicans. And this is just it. This is what kills me, guys, is people are going to read this headline and go, oh, the Republicans, they're so bad. Let me tell you, I did a complete breakdown. I read the entire bill. It was 1,800 pages long, and it was a brutal, absolutely brutal breakdown of here everything that we're seeing as far as spending billions and trillions of dollars out. Um, what struck me the most, the things that pissed me off the most on this, you have $2.5 billion going to the CDC and the National Institute Against Infectious Diseases, but you've got $25 billion going to the USPS. So $25 billion is going to a failing mail agency, and the two branches of the U.S. government that are responsible for overseeing this drug and controlling how we are going to work on getting rid of this thing are only seeing 2.5 billion. That's ludicrous. That is nuts. The Democrats would like to come out and say that they are champions for low income. Oh yeah, 1.5 billion. You gave the post office almost 25 times what you're giving low income families and children. It's absolutely unacceptable. And then the worst part is a lot of these things where they're saying we're going to expand credits, we're going to take care of health provisions, insurance provisions, they didn't even price them out. They didn't even put a price tag on them. They just said we're going to do them. Vets, agricultural losses, emergency rental assistance, property assistance, forbearance, mortgages, all of it. They just didn't price it out. Pot, though, they priced out. They're going to give $6.8 billion to pot and hemp products. Interesting note, pot and hemp products are going to see $6.8 billion, but if you are a low income family with children, you can expect far, far less. This is the champion that is the Democrats. This bill, and then at the end, the last 400 pages of the bill, so from 1400 to 1800, the bill had no pricing whatsoever. It was literally just a Christmas list. This is what we need. So they want to change the voting requirements as far as distance balloting. No. So typically, what you see in the Democrats is the Democrats like to pad their pockets. The Democrats like to invest in the things that they are going to see kickbacks from. So their lobby groups, the people that support them when they run for office, those people pay them to get them some ownership in stuff like this. So typically, from the Democrat side, you're seeing unions and you're seeing things like So unions is a big one. Unions are going to be big on the Democrat side, and you're going to see things like renters, low income families. You're going to see pot stocks. You're going to see. So the reason why the USPS is getting this is because it's unionized. The reason why you're seeing highway and infrastructure and construction is because of the unions. So that is literally what the play is for the Democrat side. Now, I can tell you right away, they snuck in on the last couple pages from 1600 to 1800. They are trying to change how elections run in the US, and they are trying to change immigration policy in the US. That's just not going to fly. It is not going to fly. It will not work. It's not going to happen. The Republicans will not allow the Democrats to use a stimulus bill for COVID as a reason to change the rules around the election or to change the rules around legal immigration into the US. Um, Now, the Senate Republicans have promised it will be dead on arrival, which means the House can pass it today, and the market will like that. That news will be positive. People go, oh, yeah, that's great. But the Senate Republicans have promised that this bill, as it currently exists, will die on the Senate floor. It will not be voted through. It is ridiculous. So, this single bill that's being, yeah, like this bill right here is going to double the amount of aid, but the aid is not going to the places that it should be. Um, yeah, and McConnell's got the same insight to this as I do. That he's looking at this as a Democrat wish list. It is a Christmas list from the Democrats, and if anything, this is more of an election platform than it is a stimulus bill. This is the Democrats going. This is what we consider a priority. Um, which apparently is not low income families, it's not children, it's not urban development. What it is anybody that works for a union, any company that's run by a union. It's bailing out the bankrupt state and municipal governments. It's saying screw you to small business and mid-sized business, and that's where their priorities are. It really is a slap in the face to small town America. It is a slap in the face to anybody who's not working as part of a union. It is a slap in the face to who is a anybody who is expecting a job from the private sector and not the public sector. It is insulting. It is absolutely insulting. Um, and I'm not just picking on Democrats because Democrats for Democrats' sake. Right now, I'm picking on the Democrats because the Democrats are the ones that presented this bill. The previous bill that was presented by the Republicans, I did the same thing to. Of there's no way you guys should have put that in there. It's not going to get approved. It's going to get shut down. It's going to delay the approval process, and people need this money to survive right now. So playing politics with the stimulus package is no good. So Pelosi's response is he wants us to just pause. Well, families know that hunger doesn't take a pause. Remember, guys, remember, low income families, she's giving nothing to. She's giving the US Postal Service 25 times what she's giving families. So I'm not sure what she's on about there. Not having a job doesn't take a pause. Well, you're not supporting small and mid-sized businesses, so that's true too. Um, so really, once you've read the bill, it allows you to look at the statements that are coming out and have an understanding of it. So McConnell read the bill and went, "This looks like a wish list." I would agree with that. I don't think that statement is biased. I don't think it's political. I think that's true. On the other side, Pelosi's saying, "Well, no, we care about families. No, you don't. Low-income families got nothing from you. You don't care about people's employment because you're not supporting small and mid-sized businesses." Um, the purpose of the federal government is to protect us. The purpose of the federal government is to ensure that the infrastructure is in place and the global economy and trade is in place. I don't think that the federal government is responsible for each state's current rollout. The way that the United States is built is each state has a governor. That governor is responsible for managing his state, his or her state, as a small country. They are responsible for the finances, the infrastructure. The governor of the state is responsible. The state government is responsible. And that the state has bankrupted itself because they are not running their state properly is a huge issue. And that comes on the dependency of looking to the federal government for a handout. So, state not taking accountability, state failing, then it becomes federal responsibility. And that's not right. Which is why people get really upset when they hear somebody like McConnell saying, well, the state should just go bankrupt. No, I don't think the states should just go bankrupt. I think the state should be fiscally responsible with the finances that they have. A state like New York or a state like California, yes, they have additional costs, but they also have an additional population. They see more in taxes, especially California. Anybody that lives in California will tell you how highly they get taxed. So this is an absolute failure in government from municipal, state, and now up to federal. You cannot constantly be looking to the federal government for a bailout. That's not how this works. It's not how it should work. State governors need to take accountability that they have not been running the state effectively. They've been spending the money that they have been given. They've been squandering it. I imagine that if we were to go through California's budget with a fine tooth comb, we could find a whole ton of money that's going to places that are absolutely ridiculous. Same thing in New York. It really is a mismanagement of funds at the state level. And so the reason why McConnell's saying, well, you should file for bankruptcy, it's because you are so poorly managing your finances. Filing for bankruptcy will give time for auditors to actually go through your books, trim the fat, make sure you're doing the right things that you're doing with your money, give you some relief from the interest that's accruing on the debt that you have, and allow you the ability to start to recover. The states see that declaration of bankruptcy as, well, that's just no good. Well, I agree it's no good, but you are in that circumstance because of how poorly you've managed what you have under you. So as far as the House coming back, they were having issues with social distancing, so that's what that's tackling there. So Tom O'Halloran from Arizona, who is a Democrat. He is a Democrat. Okay, so he's part of Pelosi's party. Has come out and said he sees many merits to the House bill, but it won't receive a hearing or a markup and hasn't passed through appropriate committees. So he's saying, yeah, this is a bill and there's some good stuff in it, but there's no way that this is going to go through as it currently exists. This is a Democrat saying this. And I think that's absolutely right. There are some good things in this bill. There are some things that I see that are good things. There's help for homeless vets. There is some money going to some places that do need money. But the massive bailouts for state and municipal government is ridiculous. $500 billion is nuts. The very little amounts of money going to the CDC, going to the NIAID, going to low-income families, going to small business, mid-sized business, that all needs to change. That all needs to radically change. And I for one, am more than happy to say just take away the pot. Cut that whole pot line. Give $7 billion to low-income families. Do that. Show me that you actually care about the low-income families in the United States. They'll pay for their own pot. You know what I mean? If somebody wants pot, they'll pay for it because they'll have a job. They'll have some support. Their kids won't be going hungry. Now is not the time to introduce $7 billion for pot. She's saying they want them to be. She wants people to be able to vote on this by proxy, by not being present in the House. She wants people to just be able to mail in their vote. Many people in the House are saying no. We need to get back to work. We need to be there. We need to be doing this. The Senate is there and working. We should be there and working. Pelosi says that until June 8th, that's not going to happen. So that's a scary number. If they can't agree on proxy voting, this is a big deal because that means that we may not see this actually go, well, not actually hit the floor of the House until June 8th. If it doesn't hit the floor of the House till June 8th, that means that it wouldn't hit the Senate until the end of June, early July. And then after all of the negotiating with that, I imagine we would see it mid-July actually go through, which is pretty crazy. Pretty crazy that we would not see another stimulus package until the end of July in the U.S. Not good news. And the more that the closer that we get to election season, the more ridiculous this is going to get. This petty back and forth, people trying to get what they want and squeeze stuff out and make false promises and lift things up. I imagine you will see Biden offering commentary on this bill, saying that how much he cares about yada, yada, yada. You'll see Trump coming against it, saying he will allow the House and Senate to decide the fate of this bill. And when it comes to his desk, he'll take a look at it. He's done a great job with the other bills. He signed them right away. And that's all true. So when Trump says that, don't be surprised, because that's absolutely true. He allows the Senate to do its job, to review the stuff from the Democrat House. The two of them go back and forth. They negotiate the bill, and then by the time it gets to Trump's desk, it already has gone through the Republican filter, so he just signs it. That's how that works. Food safety checklist testing, that's a nothing. So let's hop into Seeking Alpha and see what they've got coming in. Seeking Alpha is the last news source that I go to in the day. I like to know my economic calendar first. I like to understand what the markets are doing as a whole. I want a snapshot of the industries that I'm working in. I want to go through their press releases. And then for the last little bit here, this last 15 minutes, I like to go in and pop in. And this is the junk food. This is the low liar stuff on Seeking Alpha. I don't see any massive movers yet. Let's refresh StockTwits and see if there's anything massive moving today. ACB is up 19%. Codex is down 12. But nothing that's just blowing my mind yet. Bank of California, Hon High, Petrobras. Petrobras is Brazil's oil company. They're the big boy down there. They took a loss. Supply chain should be moved from China. So this is Trump rallying the come back to America saber again. Executive order is underway for essential drugs. That could be bad news for big bio. Sixth worker dies at Amazon. Okay, nothing super spicy in that. Other than this, executive order underway. White House is bringing an executive order which will require certain essential drugs to be made in the U.S. The order would direct HHS to study the supply chain, analyze weakness. About 70% of pharma ingredient manufacturers supplying the U.S. are located overseas, including. I don't understand this executive order. I understand what it's trying to do. I don't understand why he would put it in place. Ever read Zero Hedge for lulls? No. Nope. I've never heard of it, but I can take a look at it. Zero Hedge. Yikes. That's scary. That's scary. Without racial bias, they are predicting whether or not you are a criminal using AI. That's scary. This is Minority Report. That's what that is. That's scary. But this is nuts. That you can't demand that the supply chain for pharmaceuticals is coming from a U.S. base. You just can't do that. What all you will do is cripple the pipeline. All you will do is put more people at risk by doing this. This is stupidity. This is a dumb move. People often hear me talk about Trump and giving him the benefit of the doubt, and oh well, you're just a Trump fan. You know, you're in that Trump party. I'm not. When I see people do good things, I like to point to the fact that that was a good thing. When people do stupid things, I like to point to the fact that they are doing something stupid. That emergency order to make the pharmaceutical pipeline U.S. based is a stupid thing. That will slow down the production of not just COVID drugs. That will slow down the production of cancer drugs. That will slow down the production of absolutely every aspect. If you are getting treatment for an illness in the U.S. and you are required to take a pharmaceutical of some kind, that will hurt you. That is absolute stupidity and in no way should be considered. Absolutely none. I get that he's having a spat with China. I do. But for you to make a statement like that, stupidity. All right, we got 10 minutes here before I log off, guys. If there are any stocks you want me to take a look at, feel free to shut them out. Job cuts in Carnival, so that means Carnival will go up today. Whenever you see job cuts, guys, I know it's counterintuitive. Typically, you see job cuts and you go, "Oh, that's bad news." It is bad news for the people that work there. It is good news for the company though, because it means that they cut costs, um, which people want to hear. Here's another. Here's a biostock announcing new antibody tests. So that'll be one to watch today. It's a penny stock. I'm not a huge fan of it, but I'll throw it on here to give a watch. I don't really like it. Yeah, I mean, I don't know that making the claim that pharmaceuticals need to be produced stateside is sound. The reality is, Canadian pharmaceuticals, the majority of them are actually shipped to us from India. Uh, they're not made here in Canada. They are tested here in Canada for their ability to actually treat. Are they the pills that we're supposed to be getting? Are they the treatments we're supposed to be getting? But we allow India to manufacture that because they have a massive medical industry in India. The FDA, however, under Reagan, made it almost impossible for you guys to get your pharmaceuticals from India. On the basis of, oh, well, India, they're a podunk little third world country. There's nobody there that knows what they're doing, yada, 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 yada. India today is not what India was then, first of all. India, even back then, still had a powerhouse of a pharmaceutical industry. I think the AIDS epidemic wouldn't have been what it was if the US hadn't been such a pain in the ass with India pharmaceuticals. Um, yeah, I think that this is a foolish step to take and it's completely unnecessary. I'm okay with testing and approval on drugs coming in from outside of the US for efficacy. But other than that, I think that that's an extremely dangerous thing that just is going to cost people lives in a serious way. Uh, yeah, I don't like it. I don't like it at all. I'm gonna old grumpy man on that in a big way. What else do we have going on out here right now? Okay, it's basketball related. That's good. I was worried that this was a mass shooting. Wix. Okay, so Wix was a surprise for me, actually. I thought Wix would play to the downside. I thought small business like that would be declining. Shopify, I thought would be taking over. Um, I hmm, I think Wix, to be fair, so 6 months. I think Wix is overpriced. That's my thought. My thought on Wix is it is $160 stock. So if this were me, I would let it keep running. I think it's going to run maybe to 200, but if you go out to Q4, I think it comes back down to that 160 range. I think that that's a reasonable price range for it. This peak here is what I'm using to gauge that. All of this here is into the decline. This was Wix at the peak of economy, and now we are up here. I think that this is overpriced in a very serious way. I appreciate what Wix is as far as a massive website builder. We're going to see a lot more businesses going online, but a lot of small businesses, mid-sized businesses, are just going to eradicate themselves. They're going to be gone. I don't think that Wix is the first and foremost in their industry. To be honest, I think that there are multiple different options out there that you can hop into. They don't have a corner on the market in any way, shape, or form. I like Shopify better. As far as long-term growth, I see Shopify actually gaining. So if we take a look at Shopify right now, I like Shopify at 900. I'm not even joking about that. I like Shopify at 900. I think that this is going to be one of those stocks that is, and I mean, everybody's always looking for like, oh, who's going to be the Facebook killer? Who's going to be the Apple killer? Who's going to be the? I think Shopify is really scary for Amazon. So Amazon's model is you guys all are all sellers inside of our market, right? So they built the digital store, and you get to sell your wares inside their store. Instead, Shopify went, no, we want you guys to have 1,000 different stores and we are going to support people. So the way that it works is it would be like walking into Disneyland, right? And there's 1,000 different attractions. That's how Shopify works. You walk in the front door, and there's 1,000 different stores for you to go to. And Shopify is like, look at all the amazing stores that are here. And yes, they're on our property. Like we've given them the ability to build on our property, but they're all individuals. They do thousands of different things, thousands of different ways. And that's to their credit because those are each independently owned and operated businesses. That gives flexibility, that gives autonomy, that gives a pride and ownership, that gives small communities opportunities. With Amazon, when it's like, well, no, we just built a big building and everybody has to work inside of it, it's an outdated philosophy. I think Shopify is the future on that. Now, where does Wix play into that? Well, people say, well, Wix integrates Shopify. Yes, that's true. But Wix is not the only way to build a website, which is why I don't like it nearly as much. Every website will have a Shopify cart, Shopify checkout on it. Not every website will be built with Wix. That's my thoughts on that. Probably the long answer. Anything else you guys would like me to take a look at while we are here? If you're over on YouTube, I can see your questions as well. So if you're watching on YouTube, feel free to just throw out any questions you might have about what we're looking at, what we're going to get into as the market opens here. There's 5 minutes, so I can probably do a breakdown of one more stock before we hit the road here. So this is nationalism over globalization. So now if he said they were going to give their drug to America first because they see America as the largest potential risk of a secondary wave of COVID, that's why their focus was there. They are a France-based company. French President Macron obviously was pissed off saying, well, what about the French? You are French and we are French and you should support the French. Why are you saying the U.S. first? Which is exactly the argument that's rippling through the EU right now of nationalization versus globalization. We don't want to be the EU. We want to be Italy, Spain, Germany, France. We're operating independently. We're worried about our own people. A lot of xenophobia. BMY. Okay, so great question. So BMY has cancer candidates. I expect to see a boost on BMY early June. I expect to see a boost on BMY. Let's pull up the PDUFA calendar here. Oh, PDUFA. BMY today is expecting something on Opdivo and Yervoy. This will go through. This is their marketing on that, so they get good news today. So BMY is something that I will add here. And then in June, they have no designations in June. Nothing in July. Nothing in August. Something in September. So end of June. So they've got something today. End of June on the ASCO meeting. So the oncological meeting, the cancer conference. I expect to see BMY get a bit of a pump, and then here on September 3rd, they do have another candidate under PDUFA. So September would be another potential play. 2 in August. BMY. I don't see the second one. Oh, BMY. No, this is the following month. So there's only one in August. The one in August is for Opdivo again. Yeah. So these are different applications of it, but yeah. Let's go to the FDA calendar instead of the PDUFA calendar, though. PDUFA is just the right to market, right? So FDA, this is more the pipeline and less the marketing. So yeah, the PDUFA is the only thing that they have. Merck has a lot coming. I actually like Merck a lot better. If you had to ask which one of the two that I would put my money in, it would definitely be the Merck. That would be my opinion. They have a PDUFA, they have a phase 3, they've got a phase 1, and 2 more PDFA reviews, all for different designations. I think that I like Merck a lot more. Again, I did set price points for Merck and BMY. I see BMY at 65 by the end of Q3. I see Merck at 85 by the end of Q3. So that's my insight on it. I've been pretty accurate with Merck and BMY. My track record is pretty solid on that. That is it for me today, though, guys. I'm going to cut the stream there. Thank you so much for watching. I am here every day, Monday through Friday, 4:30 a.m. to 7 a.m. Eastern Standard Time, doing just this, market research, breaking down the market for you, taking a look at what's going on, giving you guys the picture you need before you start trading the market today. And then tomorrow, what I'm going to do is every Saturday at noon Eastern Standard Time, I'm going to be live as well, doing a breakdown, a recap of what happened in the market over the week, how my portfolio performed, and then hopefully doing some teaching on how you look at different things in the stock, different styles of plays, a lot like the drip portfolio stuff that we did earlier. So thank you so much for watching, guys. If you're not subscribed, do so on whatever platform you may be watching this on, and I look forward to catching you guys tomorrow at noon. Take it easy.